G'day taxpayers. RBA, how do we judge whether they've done a good job or not? And that's in the context of the last decade or so when they've copped a lot of criticism from getting its interest rate settings wrong. Rates were too high prior to the pandemic and inflation was below target. They were giving poor guidance in 2021 and 2022, slow to hike rates when inflation was bursting. They didn't hike too much and slow to cut rates. And even last month when they held rates steady when it was basically priced into the market and every credible economist was expecting an interest rate cut at that stage, and they surprised everybody. But anyway, that's not the issue about how we judge the RBA. The issue is rather how they meet their mandate. And there are two key components of the mandate, just to reiterate that it's the 2 to 3% inflation target. So when annual inflation's hovering around that 2.5%, great, they'll have achieved their objectives, they're part of their mandate. And that doesn't mean that every month in, month out, they have to get 2.5% inflation rate, because there are things like electricity subsidies, oil prices, tobacco taxes, banana prices because of a cyclone in Queensland, which can cause the CPI to deviate, the rate of inflation. But if we look back, this is how we judge the RBA, and they've more or less achieved their 2.5% inflation target. That is one tick towards a good job for the RBA. The other one, of course, is full employment. And alas, we don't have a number for what full employment is. The main way to judge it, in my view, is looking at wages. If wages growth is decelerating and low, then clearly we've got excess capacity in the labour market and we're away from full employment. We don't have full employment if wages growth is decelerating and low. If we've got booming wages costs, then of course we've got an over-tight labour market and the economy's probably growing too strongly. So, and that then feeds into an unemployment rate which is probably thought to be nowadays around about 4%. So, we'll look then at the full employment aspect of the RBA's mandate in terms of partly what the unemployment rate's done, but probably more important what's happened to wages growth. And if wages growth is too low for too long, then clearly the labour market has been slack, and that's almost regardless of what the unemployment rate is. Because again, we're still adapting to this concept that maybe the unemployment rate in Australia can be sustained around that 3.5% to 4% level rather than the 4.5% which the RBA is on the record talking about. So at the end of the day, RBA judgment, again, you've got to look back in hindsight to judge whether they're right or wrong, but it's really, have they met their inflation target around about 2.5% on average over a period of time, and whether we're at full employment, which means wages growth in the sort of nice 3.5-ish% annual pace, with unemployment nice and low. That's how I'm going to judge the RBA, and I have for the last 30 years, and I'm going to continue to do it. Cheers.